we saw a big decline as far as, a whole host of Asian indices as well as the global markets are concerned.
Reduction in the number of new cases is quite promising, quite exciting, and quite real.
If the market gives you an entry, say somewhere around 11,750, 740, with yesterday's low as perhaps your stop loss, and if that holds, then I think you can see potential short covering.
MSCI has announced last evening that they're going to consider the changes in the foreign ownership limits in the MSCI global indices for Indian stocks.
The bell is indicating that it's about a 0.25% gain.
Pharmaceuticals, we expect a good set of numbers. So some pockets are doing well.
The entry-level segment, which is the 100cc segment, I think 125cc and above have done much better.
I think it will be around anywhere between 80 to 90 crores is what we may have to claim from government.
Nifty's up close to about 40 points. The Sensex is higher by nearly 100 points.
Prime Minister is going to review the performance so far under the Atmanirbhar Bharat package, which was announced as the second tranche of the stimulus.
The market is up and about.
Okay, just one of those days where the market really plays as per the script, and it's been a lovely script for the bulls today. The market opening and then testing yesterday's low, rejecting that, and then moving on. And look at the kind of short covering that we've seen now, especially in the Bank Nifty, which is up 600 points, led of course by Kotak, which has been driven by news, but been a phenomenal day for the bulls. Let's see what the last hour brings for us. Surabhi, hi, good afternoon.
Good afternoon, Anuj. The other cue you didn't mention probably is your green on green combination. I mean, who would have seen this coming? India is the rank outperformer today in global markets. I mean, you contrast us to Asia or even Europe right now. Europe hasn't managed to reverse yesterday's sharp cuts. There's still pressure on those markets that's playing out. And against that backdrop, this stunning rally, Anuj?
Yeah, Surabhi, the short point here is that, if you take your positions or do stuff in the market at risk reward point of views and at extremes, triggers follow. Today's trigger, of course, is Kotak Mahindra Bank. It could have been something else, but the moment the market rejected, the first gap up was sold into, and there was some selling which was happening in the mid caps. But the moment the market rejected yesterday's low and made a higher low, and with the kind of Nifty futures discount that you had 1 day ahead of expiry, there was a 10-point discount, for God's sake, at 11 a.m. at 9:30 a.m. this morning on the Nifty futures with 1 day to go for expiry. I think that was enough evidence that the market would see short covering, and that's what's happened. I think on what you've had on Kotak, this is material, move. Money will move. We're talking about huge amount of inflows. You're talking about overall for the market about almost a $2 billion. I think in Kotak Mahindra Bank, you're talking about almost $500 million of buying. So, when that happens, and on top of that, you had good results. And today, look at some of the other numbers like CET, for example. Yeah. I think the market's got some good things going for it. And of course, now it's seen that rally, and right from the 20-day moving average, the market's seen that bounce once again, reiterating that if you buy in shakeouts with proper risk management, perhaps you make money. I think the Bank Nifty is the one to track once again, because it's I think the third or fourth attempt at 25,000. Let's see if this time we can take it out, because if we had gone there 2-3 times, every time we have fallen quite steeply from here. So that's something to keep an eye on. Also, look at the way Reliance has turned today. All through the day, and for last many days now. In fact, Reliance was one stock which was really troubling the market. But just see the last 10 minutes of move.
It's like a mid-cap stock move. I mean, that's Reliance Industries.
That is the move which is really propelling the market in the last 10 minutes. I think the things got overdone on the sell side on Reliance. I think almost everyone said that, okay, the easiest trade in the market is to sell Reliance on every rally. I think today the market just decided, okay, that enough is enough, and look at that move on Reliance. So that's the reason why you've seen this big move all of a sudden in the Nifty.
I wonder if it's going to trap some of the shorts that were still out at play on Reliance. We'll talk about that as we go along. By the way, big moves on a lot of these MSCI-related stocks as well. Nestle, Colgate, a lot of your consumer names, Asian Paints, are all surging higher. So good time to get started and take it away. It's a green looking screen today. The market is at the day's high, and it has very smartly recovered a lot of the losses that we've seen yesterday. India is the best performing market across Asia and even across Europe. And we are seeing good performance in the mid-cap index as well. The Nifty Bank, of course, taking the lead charge. Now, Morgan Stanley says it will give effect to foreign ownership limits in India in its semi-annual MSCI indices review in November. which will up India's weight to 8.7% from 8.1%. All the analysis on the beneficiaries coming right up. On the earnings front, we're going to be focusing on CAT. That's been the big beat of the afternoon. So is that a company-specific thing, or is there a big move in the tire space overall? We get that analysis for you as well. In terms of earnings action tomorrow, there's a long list, so prep it up. Hero Moto, Dr. Reddy's, Titan, Axis Bank and L&T. It's a heavy day, so we'll get you started on the prep right here on Closing Bell.
Okay, how should you position yourself? By the way, Kotak is now up 12%, and of course, we spoke about Reliance. That's surging now. Ashwani Gujral and Mitesh Thakkar now joining us for closing strategies. Good afternoon. Ashwani, what have you made of today's move, and what would be your strategy now?
Well, I guess the same game continues, and that was clear when the Nifty held on to 11,750 thereabouts. But I also think that India and stroke Asia is outperforming, because it appears that COVID is restricted to US and Europe, and here the cases are still going down, so maybe that is some cause for outperformance. Now, like yesterday was a collapse, today you have a reverse of that. Now, how long this can continue, this ping pong, that we'll have to see. But the recovery and Reliance means that we could easily get back to the 11,930, 950 sort of zone. So beyond that, we'll have to see. But the market definitely has strengthened. Bank Nifty has restarted its up move. So at 11,950 thereabouts, you'll have to reconsider. But for the moment, I think the pillars are all firing, other than an odd IT. But I think with Reliance and banks, you'll be able to hold on. I think for the moment, SBI Cards has recovered after those poor results. So this is a buy with a stop of 800, target of 865. Asian Paint is a buy with a stop of 2160, target of 2220. Muthoot Finance is a buy with a stop of 1220, and look for targets of about 1275. And maybe a risk taker could buy into a Reliance and keep today's low as a stop.
I was actually just going to ask you that, Ashwani, on what to do with Reliance now. Thanks for that quick add-on call on RIL. Mitesh, your view on the market stocks, and also actually if you're willing to take that all-out bet on Reliance, given the huge reversal that's at play right now.
I was talking about the fact that we might not get a full-blown correction, but more of a profit booking led decline. 11,680, 11,600 could be the logical targets. We have had a low of around 11,720. So we basically still are in a range which with mild, profit booking kind of setup at higher levels close to about 12,000. But overall, it's not a weak market. It's a market which is sideways and doing, a slightly broader range than what we were doing before. Coming to Reliance, I think it's hit a very important level of 2,000. If you look at the price history of Reliance, I think, in the month of August, I think we had a low of around 2009 on closing basis on the 3rd of August. And we've kind of bounced back from those levels, 2005 being the intraday low today. So I think that pivot low is respected. Also around 2000 are a couple of weekly averages converging. So I think this is a very strong level. The chart structure is not very strong. So I think this will be a stock which from 2000 can go to about 2100, 2140. And then might find some supply and would require more consolidation. But I think below 2000, I think, with today's low, I think some kind of at least a short-term low has been made. And once we start getting past 2150, then I think we might get into a stronger uptrend. On my stock calls, I have a buy on Amara Raja batteries with a stop at 759 for targets of 795, and Bajaj Finance. It's moved up slightly, but around 3420 is when I would recommend buying into this one with a stop at 3380 for a first target of 3500.
Okay, well, that's some technical calls. The big move today has happened in Kotak. In fact, Kotak has led the move. There are so many others which are joining in the party, and this is a material news which hit us this morning. Nimesh, of course, was the first to alert us about this news. So let's go across to him. Of course, what we're talking about is the press release from MSCI, and it has had impact on a lot of Indian stocks. Nimesh?
Yes, sir. In fact, the news itself is quite big positive for Indian equities. In fact, Morgan Stanley puts out that India weightage will go up to 8.7% from current 8.1%, and we'll see passive inflows of close to $2.5 billion. So that's quite material for the Indian equities, so to speak. Now, in terms of individual stock impact, I'm classifying it into two buckets. The first bucket are the stocks where they're already part of the MSCI, but the weightage will go up because of shift to the sectoral cap. The FOL will move to the sectoral cap, and on back of that, stocks like Nestle, Colgate, Britannia, Shree Cement, Asian Paints, L&T, IGL, all these stocks will benefit because the weightage will go up, including some of the PSU stocks as well. So that's the first bucket of stocks. The second bucket is the stocks which will get added to the MSCI India Index thanks to this change in the free float adjustment because of the MSCI announcement that was done yesterday. In that, the biggest beneficiary is Kotak Mahindra Bank. That explains the 11-12% move in the stock today on the back of very strong numbers, and now the Kotak weight will be added with a weight of close to 2.3%, and that's a big number, which will mean an inflow of close to $500 million in Kotak Mahindra stock itself. So that's the reason why the stock is up 10-11% in today's trade. Apart from that, the other stocks which will benefit, the likes of Adani Green, MRF, Voltas, Ipca Laboratories, Muthoot Finance, PI Industries, and ACC. These are the stocks which potentially a lot of brokerages believe can get added to the MSCI because of the changes in the free float. So that's the reason why it's a big development coming from MSCI. The announcement will happen on November 10th in the review, but materially it can mean $2.5 billion of inflows into the Indian markets because of these changes.
Nimesh, thanks a lot for that. Just to put things in perspective, last week we had a total FI inflow of $1 billion. So we are talking about $2.5 billion because of this move. Mehrbun Irani is joining us. Mehrbun, good afternoon. Of course, the stock of the day today has been Kotak Mahindra Bank. It's had, of course, this trigger of MSCI and good results as well. But now, the most expensive banking stock in India, even ahead of HDFC Bank. What would be your view on the stock?
I would say that I've seen a lot of first in the results of Kotak, and honestly, I think the expectations regarding this quarterly results were relatively more muted than what they are always for the bank. I think the highest ever quarterly net profit, the highest CASA, the highest ROA. Only problem was the lowest credit growth, I think, which it seems to be more of a conscious decision, and the management clearly stated that they will work towards credit growth now and disbursing loans going ahead. Apart from that, the MSCI news has come as a big trigger for the stock. Now, what to do at the present price? Honestly, if I'm interested in buying Kotak, I would wait for a pullback in the stock. And I don't want to say anything negative, but the only thing which disappointed me was the provisioning, the contingency provisioning towards COVID-19. A figure of 15 crore honestly looks too much on the lower side relative to what our HDFC Bank has provided. Of course, in total it is something around 1100-1200 crores, but this quarter was only 15 crores, which seems to be on the lower side. All said and done, I think it remains as one of the core picks of mine, which I've been stating over the years on your channel, along with HDFC Bank. I think this is rated as one of the top banks in the country, no doubt about it. And people are holding on, may continue to hold on. People who want to buy fresh, I would personally advise them to possibly wait for a pullback in the stock before looking at it afresh for fresh buy.
Okay, all right, Mehrbun, that's a thumbs up on Kotak Mahindra Bank. Let's now put the spotlight on the next stock that's on our radar, and that is CEAT, because it came out with a blowout set of numbers. Stock is, of course, surging higher ever since. Sonia is joining in with the fine print. Sonia.
Well, thanks a lot for that. As you rightly pointed out, it's been a big beat for CEAT on all fronts, really. It's a top-down performance beat that CEAT has reported. Revenue growth, a whopping 17% coming in. Margins for CEAT have gone up 470 basis points on a year-on-year basis, and profits as well much better than estimated. Not just that, in the investor presentation, the management mentioned that the gross margins have expanded both year-on-year and quarter-on-quarter for them because of benign raw material prices. In fact, they also have commissioned phase 2 of their Nagpur plant. There has been a surge in demand across both two-wheeler and four-wheeler tires in which they are present. The debt-equity ratio has also improved for CEAT to 0.59 times versus 0.69 times quarter-on-quarter. The debt has fallen for them from 1,930 crores in FY20 to about about 1,807 crores in the first half of FY21. Now, if you look at the valuations as well, CEAT is still cheap compared to its peers, despite the 40% run-up that CEAT has seen over the last couple of months. So, as per FY22 price to earnings, CEAT is trading somewhere around 17.5 times, while peers like MRF trading at around 22 odd times. Hence, there could be some more valuation legroom. Good numbers coming in from the company. Back to you.
Okay, all right, Sonia, thank you very much for that. Mehraboon, actually there's so much news, right? CEAT numbers and MRF, we were just going through the MSCI beneficiaries. So tires seem to be in demand. Specifically on CEAT, what would your call be?
I think if I were to do something in auto ancillary or recommend anything, I think it would be in the tire segment. I think things are working in their favor. Let's accept it. Also, if we believe that the Indian economy will be back on its rails over the next 2 quarters, 3 quarters, 4 quarters, there are reasons to believe that tire stocks will be sharply up than what they are today. Now, in anticipation of that, there has been some front running. People are bought into it, ready to be patient. Now, coming to MRF, apart from the MSCI I think honestly, I think this is a company which belongs completely into a different basket as compared to the other tire stocks. I think possibly the best balance sheet in the country. So comparing it with the CEAT or any other tire company would honestly not be fair. So it deserves a premium valuation. Coming to the other tire companies, I think while CEAT has done well as far as its numbers goes, a stock which I feel or a company management which is doing the right thing in the tire sector would be JK Tires. I think if one looks at the numbers, if one understands what the management is doing, the problems which it was facing in the past possibly could be behind it. And I think at the present price of 70, 73, in terms of relative outperformance, I'm ready to stick my neck out and say that JK Tire could possibly perform the best in the overall tire segment for the next 1 to 3 quarters.
Okay, by the way, the stock that's ready to take off or is taking off right now is Apollo Hospitals. Again, a stock where there's going to be a lot of benefit because of this MSCI move. And again, a stock which has corrected so much from its highs, even after good numbers. So today seems to be perhaps start of a fresh move after that correction that we have seen on Apollo Hospitals. Just look at that stock fly right now. Let's pull out a slightly longer chart of Apollo Hospitals. The reason I want to point this out, if you see, say a 1 month chart of Apollo Hospitals from its highs, I think it was about 2,300 or thereabout. From 2,300, it's seen a lot of selling. And in fact, it's seen a lot of shorting as well because it's a future stock. And now it's seeing this move right now. Mehraboon, any thoughts on Apollo Hospitals?
Honestly, no. I think at the present level, I would not possibly like to go ahead and recommend this stock. And I think you spelled it out correctly, I think, Anuj. I think one of the beneficiaries as far as this MSCI thing goes, but not one of my most favorite stocks.
Okay, Mehraboon, we will take a break and we'll come back and discuss some more stocks. So stay with us. Dr. Reddy's and Axis Bank will be reporting the Q2 numbers, so we'll get you the expectations.
Also, we get you some technical ideas. Sushil Kedia is going to be joining in for that in just a moment.